Hi, guys. Welcome to the How I Raised It podcast, produced by Foundersuite.com and Fundingstack.com. This is the show where you get an inside look at how real entrepreneurs and VCs raise capital for their businesses. I'm your host, Nathan Beckert, and today's episode is with Jorian Hoover, a startup fundraising coach. In this episode, we talk about fundraising prep, meaning everything you need to do to get your company ready to go raise capital. A lot of very tactical advice here. If you're tuning into this podcast to learn how to raise capital for your business, be sure to check out Foundersuite.com if you're a startup or Fundingstack.com if you are a VC or advisor. Both platforms will give you access to an awesome collection of tools for raising capital, including a massive investor database, a CRM to manage your raise, a virtual data room to run due diligence, plus pitch deck hosting, investor updates, email tools, and much more. Last but not least, if you enjoy this conversation and think someone else would too, please share it with them and hit that subscribe button to get all our latest episodes. Thank you. Now sit back and enjoy this chat with Jorian.
Welcome to How I Raised It, the podcast that goes behind the scenes with entrepreneurs who've raised capital. We uncover the tips, tricks, and techniques they use to get investors to write a check. Strap in and turn it up.
Hi, welcome to another episode of How I Raised It, produced by Foundersuite.com and Fundingstack.com. Today, I have Jorian Hoover, a startup fundraising consultant coming to us from London. How's your day going?
Yeah, my day's going really well. How are you doing today?
Pretty good. Beautiful, crisp Northern California weather. What is it? What's it doing in London?
We actually had blue skies today, which in December is really unusual.
That's great.
Yeah.
So you obviously don't have an English accent. What are you, an American, doing in London?
Yeah. So I'm out in Europe for a couple years. I was born in the Netherlands, but grew up in the States. And yeah, I'm a startup fundraising coach. And so I work about 2/3 with American startups and then 1/3 with European startups, and doing that out of London right now.
What led you to London?
Yeah, so I was born in the Netherlands, and so I had a desire just to live in Europe for a few years as an adult. And London felt like a good blend of kind of being English speaking and kind of more startups, but also being kind of close to the Netherlands and getting to explore Europe. So I feel like it's kind of a nice bridge for myself.
Is there a pretty good startup scene there? Is it concentrated?
It's pretty good. Yeah. I think it's like the 5th biggest startup city in the world. It's the largest in Europe by far. So if SF is by far the largest in the US, London's the largest in Europe. And so there's quite a few startups here. You have some big names like Revolut that have kind of really made it after being a startup about 10 years ago or so.
Yeah, awesome.
Yeah.
Has it been hard to kind of crack into the startup scene there, coming in as a non-native, or pretty easy? Is it pretty open?
It's been fairly open. I think what I like about my job is like I spend some time in the London ecosystem because I don't want all my meetings to be kind of on Zoom. And so love going to some events here, and those seem to be very open. It's a very international crowd at the startups. Like most of the founders I meet are not British, they're from other countries. So it's nice getting to do some in person, but then I'm working with startups kind of in different countries as well. So I like that balance.
Yeah, interesting. We're going to get into a lot of other topics, but any other just general observations about the London startup scene? Like you just said, it's actually not that much British founders, but
not
from elsewhere.
Not as many British founders as I would have guessed. There's a big kind of fintech influence just because it's such a financial city. And so you see a lot of kind of financial startups. The other thing is because Cambridge and Oxford are so close by, there's a lot of kind of like biotech or more sciencey startups. You have groups like Deep Science Ventures that are really kind of pushing forward, more sciencey deep tech startups.
Yeah, very cool. Do you find, last question, I promise, do you find that, like I know we have actually a very large database of UK and London investors, I think like 10,000 or so, which is probably our largest in all of Europe. But do you find the funding scene there is pretty healthy, or startups always complaining there's no active investors? What are you hearing?
Yeah, it's pretty healthy. A lot of the US VCs have set up shop here in London. So you have the Sequoias of the world, et cetera. But you also have a really kind of great suite of London-based VCs like Hoxton Ventures, and others that have kind of come up here locally. So there's a lot of capital to be had. And I would say like within Europe, there's probably 2 or 3x the amount of funding that's going kind of to UK-based startups or London-based than kind of the next city on the list.
Yeah, interesting. Cool. All right. Well, thank you for the quick and dirty primer on the London startup scene. So what do you do? Tell me about your business.
So I'm a startup fundraising coach. I help founders at the early stages, so with raising kind of pre-seed, seed, sometimes Series A. And I specifically help them with the preparation phase of fundraising. So my belief is there's a lot of things that you want to do before you kick off conversations with investors that really put you kind of in the best spot to raise confidently.
I love it. So we're going to get deep into this. I'm very excited about this episode because it is all about fundraising prep. And I feel, just from my perspective, we work with thousands of startups on Foundersuite, and founders often go into raising capital too quickly, right? They're like, oh crap, we're running out of money.
Yeah.
Let's go raise some money. And like, you guys haven't spent the time to do all the stuff that's necessary. So that's what we're going to kind of get into here. So let's just dig into it. Where do you start with a client? Let's say you get a new client on the books. How do you get them?
So I try to assess first, like, where do they kind of stand when it comes to all the things you need for a fundraise, right? So I'll go through, what are their materials looking like? How's their investor list? How's their preparedness for the pitch and kind of Q&A? Have they gotten things, if they're at the earliest stages, like kind of their legal and tax setup right for the raise? Do they know what their valuation expectations are? So I kind of do an inventory of all those things and then get a sense for, how soon can this raise happen and what kind of work needs to happen to kick it off successfully.
So let's say it's a pretty new startup. They've got a product in the market, maybe early signs of product market fit. Of those things you just described, like the materials development, the investor list building, the legal and tax setup, like, do you have kind of almost a timeline of what a startup needs to do first, next, or do you work backwards from a target date? Like, they want to go raise money in February, so we're going to work backwards. How do you work?
Yeah. So let's say a founder's coming to me and, they're open on when they need to kick off the fundraise. Sometimes you're running out of cash and it just needs to happen tomorrow. But let's say you have some flexibility. I would say the first couple things we want to figure out are kind of what I would call the contours of the raise, right? So how much are you trying to raise? What's the raise for? Do you have those kind of setup things in place? Okay. Now, if a founder is working with me and they want to raise in a few months, we'll kind get started on the materials, kind of investor list, et cetera. But if I'm talking to someone and they're not raising for a while, what I recommend even before they're talking to me is to start socializing with potential investors, whether those are VCs or angels, because it's really hard to reach out to investors cold. And so if you've kind of connected to them well in advance, you can start to reach back out when you're fundraising, and that's hard to do last minute. Once we've figured out those kind of contours of the raise, right, how much they're going for, what the valuation expectations are, what type of investor, we'll get started on 2 tracks at the same time. The first is kind of the compelling materials, which is primarily the pitch deck and story. And the second is then having a robust kind of investor list that's really tuned to that startup.
So good. All right, we're going to dig into all this stuff. In terms of the contours of the raise, it's always pretty interesting. And figuring out how much to raise. This is, an interesting question. Like, when I was doing this as a consultant years ago, we would build a financial model to kind of answer that question of how much to raise. Do you do anything like that, or is it more just like, hey, startups in your space are raising 3 to 5, let's go raise 3 to 5? Any more guidance around that?
Yeah. I usually try to guide founders on thinking through how much runway is it that you need, right? And adding a little bit of buffer. So I think at the earliest stages, it's typical to raise for like 18 to 24 months of runway, right? And then adding some buffer into that. And Yeah, usually before they start working with me, I've asked founder like, yeah, have you done a financial model? How much do you need to raise? 'Cause it's really tough if they don't know, do they need two or do they need six or
Yeah.
so, right? I think two problems I see are on either end. Sometimes people cut themselves too short. They really need 3 million and they're asking for 1.5. And that can be tricky with investors because they say, is that capital really going to get you what you need to grow this company? But then the other hand is tough too if you ask for too much, because then you're not running tight as an organization and you might dilute yourself more than you need.
100%.
Yeah.
I get people emailing us because sometimes they're customers saying, I only need to raise 250K or I only need to raise 500K. And my response is it actually doesn't make it easier to raise a tiny amount. And for a very reason you just said, a lot of investors
Yeah.
say, that's not enough. You're not raising
Yeah.
enough. I'm not going to invest in this because you're going to spend my
Yeah.
250K and be out of money.
Yeah.
Yeah.
Can I share something? I think one of the hardest amounts to raise is $500,000
Mm,
because you're in this kind of weird spot where that's still a lot of money, right? Like, I wish I had an extra $500,000 lying around. Like, you can't just get that super easily from someone. Yet it's too small to activate a lot of the VC investors. There's so many VC investors I come across, even at the earliest stages, where they say, we won't do anything under $1 million.
yeah.
And so sometimes it's also an awkward amount.
And there's the other part of that strategy of, all right, if you go out and raise maybe a bigger amount target of say 10 or something like that, and you're only kind of able to muster up 2 or 3 million, you look like you're failing, right? Versus if you go out to raise 3 million and you're getting close, and then maybe you top it up, now you're oversubscribed and you can increase the amount. So do you coach on that kind of strategy at all, or that's a tough part sometimes?
I think lightly, I don't try to get too cute with it. I think where you have a target that's very different than what you actually want. But I think you're totally right. I usually tell founders like, say a number that's slightly lower and then go over rather than something that's slightly higher and then go under. But don't like, I think some founders are like, maybe if I throw a number out like 10 or 20, that'll get people really excited. And I think in the odd case it can at the earliest stages, but it can also scare off a lot of investors.
Yeah. How about the valuation side? Do you I was never really coaching people on that side, but do you get in, and let's take a typical, fintech or SaaS seed stage company going out to raise a seed round. Like, how do you kind of coach them on valuation expectations and the corresponding dilution part of that, right?
Yeah. Yeah. And it's a balance there, right? Because I think number one is you don't want to give up too much dilution. At those early stages, even up till Series A and some extent Series B, I like to go a lot more off comps because you can't really do multiples at those early stages that well. And so I rely a lot on like Carta data and other data sources to figure out like what's kind of happening in the market, right? What is an average? And so, for example, at the pre-seed stage, that might be a $10 million post-money valuation. And at seed, maybe it's something closer to 18 or so, depending on kind of the industry. And my main goal is that a founder is really armed with data, right? So that when they are in a conversation with investors, there's a reason they're maybe saying a number and it's not just pulled out of thin air, because otherwise it's a founder who's maybe doing this for the first time. Maybe they've done it a couple times. Kind of on the other side of the negotiating table is an investor who's done this dozens, if not hundreds of times.
Yeah.
Yeah.
Yeah. Interesting. Okay. Last topic on this, or last question on this topic. How about type of instrument? Convertible note, safe, equity, priced round. Do you get into kind of advising, coaching through that? And then if so, give me some context or color.
Yeah, absolutely. I think I try to share again, like kind of what are the different options that are available and what's kind of standard. And so in the US, until you raise about 3 or 4 million or so, I'm seeing that things are happening on pre-priced rounds. So safes and convertibles. And then within that bucket, it's almost entirely safes. It's about 90% safes that are happening. And so that's my typical recommendation to founders is to kind of go for safes. But that once you start to go past 4 million or so, kind of advise them that it's hard to get safes in 2024 once you start to get to those larger numbers.
Yeah. And for anyone not familiar, I think most people probably are, but you want to give just a quick definition or overview of what a safe is? I don't know if everyone knows what that is. Yeah.
So SAFE stands for Simple Agreement for Future Equity. And it really came onto the scene, I think about 6 years ago-ish, from Y Combinator, which is a very famous accelerator. And it was created in order to have a simpler document to give equity before a price round than a convertible note. And so it's in its simplest form, it's really kind of like a few pieces of paper. You sign, you agree usually on a post-money valuation in exchange for kind of a cash investment. And then the way the SAFE works is then it will convert at a price round kind of later on. So if you have a $10 million post-money valuation cap on that SAFE, that's the highest amount valuation that those investors will come in at. So if you then raise a price round later, that's like a $20 million valuation, that SAFE will convert, but it will convert at that cap at $10 million.
Yeah. And if the market is sour and your priced round is 8 million, it converts at 8 million, right?
It converts at 8 million. That's right. Yeah. So it's either or. It's either the cap or the new valuation.
Yeah. Okay. Very good. So we outlined the contours of the raise. I like that phrase. What's next? Do we start building our materials, or do we start building an investor list, or are we doing all this in parallel?
Yeah, I would say we're doing both materials and list in parallel, with maybe a slight preference for starting with the materials and the story, because until that story's locked in, it's hard to unlock kind of the rest of the preparation.
So how do you extract the story, or are you more, putting that duty on the founders and you're just advising and coaching? Tell me your process there.
Yeah. So the process is I like to put the founder in the driver's seat, and I like to think of myself as kind of like a sparring partner and guide. And so I love to get into the details and really help kind of bring that pitch deck to the next level, but I'm maybe not except in a couple of cases, I'm not usually like creating the whole pitch deck myself or so. So what my process is I try to assess like what's the current state of the pitch deck and the story. Sometimes I'm talking to a founder where they already have a pretty crisp story and pitch deck, but more often than not, they have a pitch deck, but it's kind of a complicated story in terms of what they're trying to get across. Usually they're trying to say like 8 different problems or solutions and trying to give all the different kind of value adds or so. And that can be very confusing to an investor. And so I try to see if they can kind of see the problem first. And that's usually before we've even started working together. And if they agree there is a problem, we then start workshopping, okay, what's like a really simple kind of way to highlight this problem solution in a way that investors can say, aha, I got it.
Yeah. Yeah. Very good. Do you use, we put together, and I think we didn't invent this actually originally, but we put together kind of a pitch deck archetypes, which were, different story frameworks, right? Problem solution, crystal ball, evolution of, like, we have a couple different kind of archetypes. Do you do anything like that, or do you really just kind of organically craft the story?
Yeah, I usually stick to that kind of problem solution, sometimes the why now kind of archetype, just because it's the standard one. And I think you can kind of remove yourself from that archetype, but then it better be dang good what you're doing. And I think sometimes what I see is people kind of going off into a new direction, but kind of in a confusing way. And so if you can do a different approach, but then it really ought to be good. Whereas the kind of the standard approach, like that's been tried and tested multiple times.
Yeah. Yeah, it's hard to know if investors like something different and new, or if they want.
What's your take on it?
Yeah. What's that?
What's your take on it?
I think it depends on the business, right? Like for most, I think probably 80% of the startups, I'd say the problem solution is a good format because it's,
Yeah.
why it gets into the why. What are you doing? Why are you doing this? Why does this matter? Right? There's all that elements of the problem solution. I think for some really crazy way out there stuff. Here's an example. These were not a customer of ours, but
Yeah.
Colossal Biosciences is a de-extinction company bringing back the woolly mammoth. Like that doesn't fit for problem solution, right? You can't
Right.
really say the
Yeah,
problem
we
is
don't
we
have
don't have
enough
any
woolly
woolly
mammoths
mammoths.
is the problem.
Yeah, but you can get into the kind of like some other frameworks. I don't remember their pitch, but it was like, um, wouldn't it be cool if that's sort of another
Yeah.
framework they could maybe fit in there, or even just really getting into like this future vision of imagine Jurassic Park come to life
Yeah.
with Pleistocene, I don't know, whatever age, extinct animals, right? Things
Yeah.
like that. So yeah, it kind of depends on the business, but problem solution
Yeah.
probably 80% for sure.
Yeah. And sometimes it's like a space that's like so confused. It's so new to anyone that you actually have to do a lot of education almost before you can get even to the problem. So,
Yeah. It's good. We could spend a whole session just talking about that.
yeah.
What materials? What's the sort of state or expected set of materials these days? Just pitch deck and financial model, or teaser? What do you got? What do you put together?
Um, do you want me to talk through different like rounds or focus on pre-seed, seed,
Let's
series,
stay kind of early stage, seed,
early stage?
pre-seed.
Yeah.
Yeah.
Pre-seed, seed.
What do you need?
Yeah. I would say, yeah, you want a pitch deck for sure. One thing I see probably 30% of startups also have is like an investment memo or so, or like a kind of a longer memo. Um, Not required, but some people have that. And then a simple data room at those early stages. Having a high level financial model. It's still really early, so everyone knows it's just projections. But something on how you think about the economics and kind of financial projections. There is a debate among some people on whether or not you need that at the pre-seed stage, but I think it's nice to have. And then maybe a few things in the data room, like who the team members are, right? What the cap table looks like, some of the legal documents, some of those basics.
Investor memo is kind of interesting. Way back when I was consulting
Yeah,
at a similar business to what you're doing, we used to build business plans, and then business plans like totally went out of fashion, and no one wrote business
yeah,
plans anymore. And then I started to see, people writing investor memos, which kind of are very similar to business plans.
yeah.
Like, this is like coming back to
They're
life
just
with
on Notion now instead. Yeah,
yeah, on a different platform with a new name, but basically the same thing, right?
yeah.
What what is your opinion on investor memos, and like, what should it contain, and what's the point, I guess? What do you think about
Yeah.
that? Yeah.
I think part of the point is you're kind of doing the work for the investor who's really a proponent at the VC to then go to the investment committee and say, like, here's kind of the write up, or they can kind of take that and do their own analysis. The other, I think when it really makes sense is when you're in a space that requires a lot of nuance. So, for example, something kind of in fintech, um, some things in the kind of health sphere where you have a lot of explaining you need to do. But if you do all that explaining on like a crisp, what's supposed to be a crisp, like 10 or 12 slide pitch deck, you're going to lose people. And so you kind of want a place for them to be able to nerd out a little bit and understand your assumptions.
Yeah, I like that. A place to use your investment memo or investor memo
Yeah.
as a place to nerd out. There's a quote
Yeah.
right there.
Yeah.
We'll make t-shirts for that.
Perfect.
I like it. And typically, how long is an investor memo? I think people are pretty familiar with pitch decks and the others, but how long do you usually recommend on an investor memo?
Gosh, I don't know about average length because I've seen super long ones. But I would say, like, I'm imagining if it was like a Word document or something, maybe this is somewhere between 4 and 8 pages or so.
Yeah.
Yeah.
Okay, so pitch deck, investor memo, in some cases, financial model, data room. I'm a huge proponent of the data room. I love data rooms for so many reasons. It just makes you look like a rock star, and
Yeah.
speeds up due diligence. Yeah. Any other thoughts on setting that up, or have we kind of covered it?
I think one other thing I might just mention on the data room is it can be a really nice kind of tool to use in that first investor meeting, kind of as a carrot for further action from an investor, right? So afterwards, you can follow up and say, hey, if you'd like to kind of continue having conversations with us and continue the process, like let me know, happy to open up the data room. But it can kind of be a nice next step you can have investors take. Um, yeah.
I like that. I
The
love
other-
that
yeah,
metaphor of using it as a carrot for a next step. That's great.
yeah. Because sometimes you're like at that first meeting and you're like, shoot, how do we follow up? What's next? And maybe one other word of advice on the data room is don't throw too many things in there. I sometimes see data rooms at the very early stages that have like every document known to mankind about the startup, and it's like too much detail. And I think you can start to overwhelm the investor sometimes if you start throwing in every analysis possible.
Yeah, no, I think that's accurate. We have sort of a standard template for our data rooms. That's I still recommend, like you're saying, keeping it pretty simple. But basically, corporate docs, pitch materials, financial. These are the folders: corporate
Yeah,
docs, pitch materials, financials, marketing and sales materials, customer details, pipeline, tech architecture, product roadmap and demo, intellectual property, market research and competition, social media and press coverage, and then team and advisors. So basically 11 folders. And I think
yeah,
having it organized nice and neat helps, even if you do have a lot of
yeah.
documents, right? Yeah.
Having a nice like table of contents so that there might be 20 documents in there, but they're really nicely organized. So it's clear to an investor what they're about to look at.
Yeah. When we talked a couple weeks ago, you also mentioned a few other pieces, which I'll kind of lump into
Yeah,
the materials section, such as LinkedIn profile, social intro emails, a core blurb, uh,
yeah,
kind of smaller bits and
yeah.
bite-sized pieces. You want to talk about any of that? Mhm.
Sure. You know, on the LinkedIn front or web presence front, when you think about an investor, right, and they kind of get this inbound deal, whether it's coming in warm or cold, and let's say they're interested, they're not just going to look at that email they've been sent, but they'll Google you, they'll look you up, etc. And so, while you don't need it professionally designed necessarily, that LinkedIn presence or your website definitely shouldn't contradict at least what you're saying kind of in the pitch materials, um, or have a very confusing kind of background on LinkedIn that's not explained. And so sometimes I think it's worth it for founders to kind of make sure that it's tidied up.
Yeah.
Um,
No. Right. Good.
yeah, and maybe on the blurbs, let me talk about that a little bit. So when you're going through the fundraising process, there's so many different parties that you're trying to get excited about your startup. It's not only the direct investors you're talking to, but it's also, potential angels. It's people in your network who might introduce you to investors. It might be friends, family who want to connect you, etc. And I think some founders forget that you really want to get all of those parties like equally excited about what you're building so that they can vouch on your behalf, right? Or they can take the meeting. And it can take a long time to reach out to all these folks, if you start crafting super personalized emails. And so what I recommend is that founders have a kind of what I call core blurb that's nice and short, usually under 150 words or so, where you describe your startup and you give a few of the sexiest kind of bullets about what the startup is or you as co-founders, your background, and what the potential is. And what you can do is you can leverage that core blurb, then put it in all your kind of emails, WhatsApp messages, et cetera, and personalize it for a couple lines and then tell folks, hey, here's a little bit of a blurb about our startup. Or
Yeah.
so that way you take out a lot of the work, but you're able to still personalize kind of at scale.
I mean, is it pretty much the elevator pitch? Are we kind of like business plan is now called investor memo? Is elevator pitch now called core blurb, or is it a little different?
Yeah, maybe core blurb is just a name I've come up with. Yeah, elevator pitch is the same. I think maybe a lot of people don't treat it like an elevator pitch. It's like when I see a lot of outreach emails, like when I'm first working with a founder and they said, hey, I've already kind of reached out to some investors and it was through a buddy who said he'd connect me and nothing happened. I say, oh, can you show me the email? And so often it's like a full page that's been written out with all the context, everything they've done.
Yes.
So yeah, whether they call it elevator pitch or core blurb, I don't care, but it needs to be a lot shorter.
150 words is your kind of recommended max.
That's my recommended max. Yeah, like these investors, they're getting flooded with messages. They might be in an Uber kind of in between meetings or something, and they're kind of going through their phone, and it needs to catch their attention quickly. Like, what is this? Yeah. And is it interesting?
Totally. I 100% agree with you. I see those terrible emails all the time that are just way too much, right? It's like the entire company history. And I think founders, rightly or wrongly, they're trying to give the context of what they're doing and why they're doing it and all that. But that comes way later, right?
Yeah.
Right now, you just need to describe, we're building, Uber for preteens and we've got 30,000 drivers on the road. Right. Something like, super short.
Exactly.
Very cool. What about, anything else in sort of materials that we haven't covered? Anything we haven't missed there?
Maybe it would make sense for me to talk a little bit about internal materials, like something I recommend kind of co-founders build but don't share with investors.
Yes,
that makes
please.
sense. So one exercise I recommend founders go through is to build what I call a thorny Q&A list. And so I find often folks are preparing for the pitch, right? That initial kind of 10 minutes where you say, here's my startup, here's why it's exciting. But the truth is that most of your meetings with investors are going to be more Q&A, right? That's going to be 90% of the time that you're spending with an investor who ends up investing. People don't often prepare for those Q&A. And so what I recommend founders do is to go through methodically on their pitch deck, like slide by slide. And you can do this with investor friends, your co-founders. And for each slide, think through like, what is a question I don't want to get asked on the slide, right? Or what's likely going to get asked. And you come up with 20 to 30 kind of questions, some of them really gnarly, some of them kind of a little easier. And then you come up with what are your kind of go-to answers on those, and you prepare that. Not so that you can sound formulaic, but so if you get thrown a question like, what if Google enters this space? You're not thinking about that on the spot and kind of saying something you don't want to be saying.
Yeah, totally. Love it. And is that just a sort of a supplemental document? You wouldn't share that with investors necessarily. It's more just your own prep.
Yeah, don't share that. I always say like every investor is entitled to their worries, but don't start giving them all the potential worries about your startup.
Yeah, that's a good phrase. I like that. Cool. Anything else that you're doing there in this sort of prep and materials phase? Do you sit down and coach these founders in how they deliver the pitch? Anything like that? And if so, any tips around that or what?
Yeah, we'll do a number of workshops usually on actually practicing the pitch. Usually the way I do it is I actually recommend people record on their own, because I feel like then they can do a more honest kind of recording of what their pitch would be like. And I usually have them review it first. And I'm always amazed how many improvements come through just like when they're able to self-review. And then I have them send me a recording and we kind of go back and forth on some of those recorded sessions. I give kind of feedback until it gets to the point where they have kind of a tight 8-minute or so pitch.
Yeah. What's the most common issues you see people struggling with at that, the delivery phase?
I think just reading off the slide rather than kind of sharing a story or something that feels threaded throughout the whole deck. because you're often in that first meeting with an investor, they're going to say, "Oh, I've already kind of seen the deck. Let's just jump into questions or so." So you still need to know how to talk about your company without kind of having your slides, and without just feeling like you're just regurgitating that information.
Yep. Yep. Cool. All right. Anything else in terms of kind of materials prep? We talked about blurbs, practice, all that stuff, or should we move on to investor list building?
Yeah, I think we can move on to investor list building.
So take me through that. You again, sticking with this seed, London-based fintech seed startup. What do you do? How do you build that magical investor list?
Yeah. So let's start with what is our goal, right, in an investor list. We want a list that is robust enough so that we can really pull from it kind of during the fundraise execution. So at the earliest stages, if I'm working with a London-based startup or a US-based startup, doesn't matter here. That's 100 plus investors. I usually recommend 100 to 150 investors. So you have to ask yourself, okay, are we going for VCs or are we going for angels? Most of the time I'm working with startups going for VCs. And so what I work with founders on doing is kind of doing a search across different platforms. Couple that I really like are Crunchbase and VC Sheet to narrow down from what sector they're in, what they're building, and what geography they're in, to an investor list that they can start kind of populating as a first step.
And what are we looking for here? Obviously, folks that invest in industry, but how else are you kind of identifying those investors?
Yeah, a really critical thing is what is their check size? What will they lead an investment? How much they invest? Because let's say you're trying to get a $5 million investment. Well, if your investor list is made up of investors who will participate in a $5 million round, but they won't kind of lead it, or they can only write a $200,000 check, what would happen is you're going through a lot of the meetings and they say, "Oh yeah, let us know how the round develops. We might like to follow on." So yeah, one other key characteristic is, how much will they invest? Industry and geography are really key. The other thing is you don't want to just come at it from the angle of what do they say they do, right? Because a lot of investors like to say they are very generalist and they invest in 12 different things.
Mm-hmm.
But I want to see where have they spoken really with their wallets. And so looking at something like Crunchbase and PitchBook and seeing, how many fintech investments are they really making is a great way to find out, are they a potential investor?
Yeah, super interesting. So 100, 150, obviously one thing. So since this is my show, I got to plug our own product, but we have 227,000 investors in our database, and that soon will be about 250,000. And you can search by industry, location, all that good stuff. But one thing I tell people is like you search by fintech, London, seed stage. I still recommend people go in and kind of like what you're saying here, go look at their web page, look at their portfolio link, look at their team link, look at their social medias. Even though we've narrowed it down for you, I still want people to spend like a minute or two or three kind of qualifying each investor, right? Like you're saying, make sure they actually invest what they say they invest in, because
if there's one area of the fundraise prep, and some of my founders I work with, they hate me pushing them on this, but one area of the fundraising prep where I really recommend you do tedious work, it's with researching that investor list. You're totally right. You can use tools like the ones you've built to come up with that list of 200 or 300 to kind of start narrowing down. But you really want to go on their website, on their Twitter, etc., figure out what are they saying, and also who is the partner you would want to be talking to, right? Because maybe they have an 8-person investment team, but they are focused on different things. So you also want to make sure who is the right person to get connected with.
Yeah, totally. And do you ever recommend going? I always tell you, I'd love to argue about this if we have contrary opinions, but
Yeah.
I always recommend going like partner only, or, do you ever make a case to, maybe chat with an associate or analyst or junior person, maybe because you have a closer connection to that lower level person, or what's your thoughts on that?
Yeah, this is it's been a hot debate recently on Twitter and LinkedIn on like should you talk to an associate? So I also recommend, go straight to the partner. But I think I say don't get too cute with it. Like if you have a really great intro to someone who's not a partner, right? But it's a really strong intro, like there's a reason that person's at the firm. And a lot of VCs really do empower their kind of associates and principals to bring deals up. And so yeah, it's a little bit context specific on how good is your intro to that other person. I don't know. Would you disagree? Would you say kind of stick with partners only no matter what?
To the extent possible. Just,
Yeah.
I don't know. I've seen, in my opinion, again, and I have strong opinions, but the lower level people really only have the power to say no. They don't have the power to say yes, right? Whereas the partners, and it differs by fund. Some funds, they need like unanimous consent or to approve a deal. Others, a partner can push it through, even if other
Yeah.
people are not so keen on it. So that's why I just love having the partner as your backer or promoter, because they really have the power.
Absolutely.
So, yeah, I don't know. Yeah.
Yeah. I think you're more right on that. Like if you can get to the partner, like try to get to the partner.
Sometimes you got to just take what you can get, though.
Yeah.
So there's always.
Yeah, and I've seen deals like I spent a little bit of time at Owl Ventures and was working closely with the principal there, and with multiple deals kind of come through where the principal's the one who did all the initial chats, right? Because sometimes you do have someone who has more time and is really fighting for your deal as well.
Yeah, and just to expand even more, you might find the right partner, reach out, get an intro to that partner, and that partner still might kick you down to an analyst to kind of talk to them first. So
Yeah.
yeah, you got to do what you got to do. Cool. Anything else on an investor list? We've built our fundraising contours of the raise. We've got our materials put together. We've built this pretty nice list. Actually, here's a question: what do you tell people in terms of how much time they should devote to this investor list building? Like, how long should this take?
Yeah. So overall, like let's say you're entering a fundraise and you kind of have an idea of how much you want to raise and like your start of your pitch deck. I usually think you can do all the preparation in about 2 months. I usually say 2 months, and then it often ends up taking kind of 3. I've seen it done quicker as well. So yeah, 2 months typically is how long it takes for the full investor list. But when I say 2 months, probably a month of that is like researching the list. And then the next month is like tiering the list, right? Figuring out like what's your tier 1, tier 2, tier 3 in terms of preference. Really kind of going deep on LinkedIn and figuring out who are your potential intros. If you don't have intros, trying to network, etc. So all of that takes about 2 months.
Yeah, that makes sense. One more product plug, again, because it's my show, but we are 1 week away from releasing a Get Intro button that does that for you. It looks at your contacts, your calendar, your LinkedIn, a bunch of other stuff, and helps you map a warm intro path to every investor. So
do you want to share a little bit more about like how that works?
Yeah, that's it. I mean, it's basically trying to find first, second, third degree connections to every target investor, right? So if you identify Mark Suster as a good target for your business, it'll look at your background, your work history, your LinkedIn, and your contacts, and say, here are a couple paths there, and then it's kind of your decision to figure out which is your strongest path. Who you know the best between those first, second, third degree connections. But frankly, it's been one of the hardest parts and a gap in our product lineup is like, okay, great, we built this list, you got all your stuff ready. How do you get the damn intro? And so this is
Right.
helping bridge that gap.
Yeah.
So, yeah. Anyway.
And I think getting like, imagine when folks are doing it, they'll be able to do it at scale with you guys, which is really cool, right? Because right now you have to kind of individually like, okay, do a LinkedIn search. It takes quite a while. So getting to do that for a whole table would be really kind of interesting.
Yeah. And then it's managing all these third parties, all your connectors, right? That's
Yeah.
the next challenge once you've sort of figured out how to get in touch with everyone. Now you've got to activate, as I kind of call it, we call it fundraising as a team sport, right? You're activating all these people who hopefully like you and want to help you out.
Exactly. And like those, like kind of coming back to those blurbs or the elevator pitch, as you said, like it's so important to get those people excited, right? Because if that's your in to Sequoia, for example, like, well, the person introing you better get excited, right? Because they're putting their connection kind of on the line for you potentially.
Yeah, and that's so true. And not only are they putting their connection or their social capital on the line for you, so your blurb better look and sound good and professional and be tight. But as I always like to tell people who ask me for intros, like, you better make me look good, right? I'm making an introduction to this investor, and if I'm feeding this investor bad startups, they're not going to take my intros anymore, right? So you better make me look good. And that means a lot of things, obviously, how you pitch and present, how you interact. Also, hopefully you just have a pretty exciting business, right? That's sort of the fundamental piece of that.
Yeah. At the end of the day, traction really speaks volumes.
Totally. Yeah. And then founders sometimes don't get that. They're like, oh, just make the intro. I'm like, well, your blurb kind of sucks. Like this is going to make me look a little bit better. It's almost like a meter.
Yeah.
Zeros here. Am I getting points, positive points or negative points with this intro?
Yeah. Or sometimes you get one that you're really excited about from a friend, but they've sent you an essay or something, and you're like, I can't forward this to the investor. They'll like I know this is good, but they will like laugh at this, and so I need to I then end up rewriting it or so, and because I want them to think, hey, you're sending me good quality deals.
And on that same vein, one thing that is a little pet peeve of mine, I say, okay, great, I'll make an intro to this person. Send me a forwardable email. And what I'm asking, and I just need to be more articulate what I'm expecting, but sometimes people will write an email as if they're me, like, hi, Mark, here's my friend John who No, I actually don't want that. I want you to write an email that says, hey, Nathan, I'm trying to get in touch with Mark Suster. That he invests in our space. Here's why we're really relevant and exciting to Mark. I see you're connected to him. Can I get the intro? That way I can just actually forward that on. So that's my definition of a good intro request email. Any thoughts on that topic?
Yeah, I sometimes will reframe the forwardable intro email as like, it's a fake email. You are sending me a fake email, right? Because you are saying, hey, Jorian, like, as mentioned, like, would love a potential intro to so-and-so. Like, here's some information about my company. That is totally a fake email. That is not for me at all. But what it allows me to do is hit the forward button and then tell this investor in like 1 or 2 lines something amazing about this person I want the intro to be sent to. And then just say, see below. And the reason having it in that other person's language is so important is because I no longer feel like I'm putting kind of the way I talk like on the line, right? I've said a couple nice things, then I said, here's what this other person said. But if someone writes an intro as if it's me, I'm like, oh shoot, I don't talk that way. Like I got to rewrite this whole thing now.
100%. Yep. Yeah. That's great. Here's a question. There's always some debate about this. Do you recommend the kind of the double intro or the opt-in intro, or do you like the connector to make the intro right away? Meaning, let's say you're asking me for an intro to Mark Suster. You write your little blurb, you send it to me, the fake email. Do you prefer I directly connect, send an email to Mark saying, hey, here's my friend Jorian. I'd like to connect you guys, or do you do the, hey, Mark, here's Jorian, here's his business, great guy. Do you want me to make the intro? Right? Do you get the difference?
Yeah. Yeah, I almost always do that double opt-in where I've said, yeah, hey, do you want me to make this intro? Unless there's a couple investors who have said, hey, you have a good enough track record with what you've sent. Like just send, like I trust you. Like I'll let you know if that stops, but just send it over,
Just send
right?
it, yeah.
I would say that's probably 20% of the time. The other 80%, they would prefer that kind of opt-in.
Yeah, gotcha.
Yeah.
Cool, cool. What else have we not covered? I mean, we've kind of led the horse up to the trough here. Uh, Pitch materials, investor lists, all the right way and wrong way of doing
Yeah.
this. Do you then kind of step back, or do you coach them through the actual fundraising process and journey?
Yeah, I'm usually there for the beginning parts of the kind of execution, just making sure, as they're starting to have a lot of investor meetings, they kind of have someone by their side. And then usually I let them continue, but some founders say, hey, can you continue on until the end of the fundraise or so? One other thing I work quite a bit with founders on is kind of like the strategy element for how to run a good fundraising process. Would it be good to talk just a
Yeah,
little bit about
please
that?
share that. Absolutely.
Yeah. So one mistake I see with how people run fundraisers is they kind of like stumble their way through it, which is a normal way to do it. But you kind of have like 3 meetings with a VC one week, like 2 the next week, a few more the following week, and it's just this kind of thing that just keeps going. And sometimes you get an investment that way, but you're not really creating momentum, and it doesn't feel like a moving train that an investor really has to go get on.
Mhm.
So what I recommend instead is kind of picking a kickoff week or 2 weeks where you try to jam as many kind of investor intro meetings as possible. Usually say if you can get 30, 40 meetings, I know it sounds like a lot, but in that couple weeks, um, that can create a lot of momentum for the fundraise and also put you in the driver's seat in terms of process. And that's also a little bit where like some of the tiering comes in. You want to meet with some tier 2s or 3s first, but generally in that first couple of weeks, those are the investors you're excited about, and you want additional investors, I would say, in your back pocket that if the kind of process starts to slow down, you could add fuel to the fire with some additional investor meetings.
Let me see if I understand what you said. Start with your tier 2, tier 3, and then get to the tier 1, or start tier 1 and then supplement if things slow down with tier 2 and 3. What?
Yeah, I would say like start with the tier 2, maybe tier 2, but then get to tier 1 pretty quickly.
Okay.
Right. So maybe tier 2, maybe tier 3 in that first couple weeks. It depends how many meetings you're able to get. Some people are just able to get meetings with everyone they want, but that's not most founders. And so let's say you have a 2-week kickoff period. I would say maybe those first few days are with investors you're excited about, but maybe not tier 1,
Mhm.
right? So that you can get some of those initial kind of meetings out of the way and kind of practice that pitch. But then I tell founders not to get too cute with waiting too long on their kind of top investors and to then start meeting with that tier 1.
Yeah. No, I like that strategy. Um, just to put some frameworks around this.
Yeah.
You're saying try and schedule 30 to 40 meetings in those first, call it 2 weeks, 3 weeks,
Yeah.
something like that. Just, yeah. Mm-hmm.
Yeah. And let investors know that you're doing your kickoff then, kind of share with them, yeah, I'm kicking off, for example, the last 2 weeks of February. Like, would love to schedule a meeting with you then.
Yeah.
Yeah.
I like that. Very good. What else? Well, there's probably a lot more we could talk about, but any common mistakes you see founders you work with make during the process, right? So we have our kickoff week. We're packing our days full of all these meetings. How do we keep that momentum going, and where do people make mistakes?
Yeah, I would say one mistake I often see, and I help founders with this, is not having a kind of CRM to kind of track investor meetings. And when I say CRM, I don't mean you have to go run up a kind of instance of HubSpot or something like this. You could do it in Google Sheets or Notion, but you start
or
to
Foundersuite, of
or
course.
Founders. Oh my
Yes.
God, I'm so sorry.
No, I'm kidding.
That was on me. We can edit that out. That is oh my God. Embarrassing. So yeah, you're gonna be on Foundersuite. And you'll that way you have your one-stop shop and you can do your investor intros in there. I'll try to save myself a little bit. Um so
Yeah.
sorry. But you want one place that you can track all your investors. Because what's going to happen is, let's say you've met with those 40 investors, and let's say a lot of them want to then see the data room, or they kind of are excited about next steps. That starts to become a lot of emails you're tracking, a lot of different kind of links to data rooms you're tracking, a lot of next steps. And I'm amazed at how often I see kind of these things fall through the cracks. And yeah, you want to play a little bit hard to get with investors, but like, investors are also busy people. And so sometimes they literally had a different live deal and they forgot to respond. And so if you haven't heard back in a week, might be good to respond. I've seen several deals happen where an investor didn't respond for over a week, and then a friendly ping actually can go a long way.
That's always another topic of debate of how many times do you bug an investor and how frequently, right? What's the cadence of nudges, right? All that stuff. And it's a hard thing, right? Because you've got to kind of be aggressive when you're raising money. These, like you just said, these guys and gals are super busy. They have other deals they're working on. But when is too much? Where's the cutoff line of nudges?
Yeah.
Yeah.
And it's a tough one, right? Because there has to be some self kind of understanding here of like, am I annoying the investor? I think more, if you start following up with people more than once a week, that's probably when it starts to get too much. But if you haven't heard from someone in a week or so, I think a little bit of a nudge doesn't hurt. If you can add some value in that nudge, like give them a little bit of extra information about the business or talk about some sort of recent progress, right? Like I think that can help as well.
I agree with that. That was my next question. Like, do you have a template or standard good text to do the nudge? Because just a hey, checking in question mark is kind of annoying. But yeah, if you can add a little bit of news, I like that. Anything else? Any other good verbiage you've seen people use in their nudges, follow-ups? I don't know.
I think going back through the call notes, right, and what the investor already said, and then bringing back that context into the equation. So often they'll say like, oh yeah, I'll like get back to you by Thursday or so, or I'll check out the data room, etc. And if instead of just saying, hey, just checking in, you say, hey, like wanted to see if you got a chance to check out our data room, like let us know if you have any questions, feels a lot more context specific to what's going on with that investor.
Yeah, it's good. All right, I know we're pretty much out of time, but one last question or two and I'll let you go. What's your opinion on kind of Zoom versus in person? Like the advantage of Zoom, of course, doing the pitch meetings, you can have a lot of them in a day, right? You can pack your day full of Zoom calls. Advantage of in person is that personal connection face to face. What do you coach your folks to push for?
Yeah, if you're doing 30, 40 meetings in 2 weeks, it can be hard to get all those in person. I usually recommend the first meeting is fine to do on Zoom. But that if things progress, it can be a really nice opportunity to get to meet folks in person and take a few flights out to, SF or New York or wherever these potential investors are. I don't know. What do you say? Would you recommend kind of doing a roadshow? Like I know that pre-COVID, that was more the way.
I know it's changed. I used to be just, hey, it's all got to be. I mean, like I used to help companies raise capital, and I would go with the CEO, and we would literally spend an entire day going up and down Sand Hill Road, door to door. I mean, not door to door, literally, but office to office, basically packing in these meetings, and then take a lunch break, and then go have a bunch more. And that was the way it's done. COVID changed that. So much is done on Zoom now. I guess I'm just old school, but I do like to have the personal connection because you got to kind of read body language. You got to just get the vibe, which is hard to do over Zoom sometimes, Um, so I'm a little
Yeah.
old school. I think I tilt a little bit more towards the personal meeting, but yeah, it's much more efficient to do it all on Zoom. So
Yeah.
yeah,
And if it's going to be a lead investor, I mean, yeah, definitely try to meet them in person at some point before you sign the papers, because it's kind of like a marriage, right?
yeah.
And this person's going to be an important partner in the business, and so definitely want some in-person interactions.
And I think it actually is a pretty strong signal too. If I'm having an interaction with you over Zoom, maybe like you're saying, first meeting or so on Zoom, and if I feel a good vibe, I think it's a nice thing to say, hey, Jorian, I really liked our meeting. I want to book a time and come out there. I'm going to fly out to California. I'd love to come have, the next conversation over lunch, kind of like show that initiative to the investor. I think that goes a long way. It's
Yeah, I like that.
Yeah, Jason Lemkin, who runs SaaStr, his emails, and this is more on the sales side of things, but his thing is like, you can't go wrong by getting on a plane and go meeting your customers. Like, that's one of the highest value things you can do is get on a plane and go meet your customers. And I think same kind of applies to investors too, right? Get on a plane, schedule some meetings in New York, schedule some San Francisco meetings, whatever the scenario is, and go press the flesh. So I like that.
Yeah. Yeah.
All right, last question. We've covered so much, but any other good nuggets, bits of advice you like to give founders as they're, deep in the throes of raising capital? Any other tips, strategies, tactics we haven't covered?
I mean, of course, the story is so important, right? Getting simplicity there, but maybe just a comment around fundraising. Like, I always share with founders, it can be such a stressful time, right? Because you're raising capital, and it's crucial to the business. But I try to share the perspective of try to enjoy it. Like, you get to meet so many incredible people during this period, and there's a lot of people in your life that really want to help you. Investors are excited to learn about your business, and you might meet other founders in the process, and like those can be future friendships and also folks that can help your business going forward. And so, try to bring your best self and try to enjoy kind of making these new connections while you're on the road fundraising.
I mean, it's like perfect concluding statement. Try to enjoy it. Yeah. I haven't raised in a while and I kind of miss it, to be honest, even though it's like the most stressful thing you can do.
Yeah.
So, excellent. All right. If people want to learn more about you and your business, where should we point them? Mm-hmm.
Yeah. Best place is either find me on LinkedIn and send me a DM. It's just Jorian Hoover on LinkedIn with a J, or go to jorianhoover.com and check out my website. Would love to chat with anyone interested in fundraising, and happy to sit down and talk with you.
This is my last question, I promise. What's your opinion of kind of the market? We're recording this in late 2024. What's your sort of either crystal ball outlook for, where the fundraising market is or going in the next year? Any thoughts?
Yeah, my crystal ball is I am hoping that I'm thinking that the IPO window will start to open up at least in the second half of 2025. And I think that'll mean a lot more kind of Series A rounds are starting to get done in 2025. I think we've started to see a slowdown in 2024 of Series A rounds. So I'm hoping 2025 those kind of come back. Whereas we've already started to see kind of pre-seed and seed kind of come back to good strength in 2024.
I actually share your sentiment, possibly because I'm hopeful that'll happen.
Yeah.
I see a lot of startups struggling right now, but I think there is some change on the horizon, and markets might open up a little bit, so that's good for everyone. Wonderful. Absolutely. Thank you, sir. This has been super interesting.
Thank you.
JorianHoover.com. That's with a J, JorianHoover.com. If you want to learn more, and maybe we'll catch you in a year or so and see what new strategies you picked up along the way, and get you back on the show or something.
That would be great. Thanks so much for having me on, Nathan.
Over now. Thank you.